Nasdaq, which is really Apple, Apple and some other stocks.
That's right, Apple and gang, you could call it. Apple again. I think it was the 5th day in a row of gains. They're up around $545 or so. So the stock seems unstoppable, and we still have 4 or 5 trading days until next Wednesday.
So it touched, there it is, touched 3,000 early in the trading session, around 10, when the market sub was on. And then after they'd had the market sub, which also coincided with when they were hearing Ben Bernanke speak, it sort of drifted off. Are those two things, I was joking about the market sub, but the Ben Bernanke talk and it drifting off, is that why?
I think that's a pretty good theory. Earlier, you had some news out of Europe which suggested that a lot of banks were borrowing from the ECB, the European Central Bank. That's a good thing, investors say today, although tomorrow they may change their mind.
It's a good thing that banks are so strapped for cash that they're borrowing from the ECB. Is that what I'm hearing from you?
This is a new normal, Simon. So,
it's a good thing when banks are... Okay, fine, if that's a good thing.
Markets feel relatively fine about this.
That's right.
It's, as I like to say, you can get used to anything. A man can get used to anything.
Well,
and the markets can get used to rampant borrowing from central banks.
So, just to repeat that, it's a good thing that the banks in Europe are so strapped for cash that they're borrowing from their central bank.
Yes.
Okay.
Yes.
And why?
And why? And that's because it means that at least banks are going to be fully liquidated. That's the thinking goes. And
full of liquidity.
Full of liquidity.
Not liquidated. No,
Not liquidated.
Oh, yes. Got to be careful there.
Got to be careful there, yes.
So full liquidity and
full
able
of liquidity
to make loans and keep economies
that's right,
moving.
In the event that something precipitous were to happen in
So
Greece or elsewhere.
Here's the thing. In the US, we found that loading up the banks with cash and with free money was supposed to precipitate, to use the word, a lot of lending.
Right.
Not so much in the actual fact.
That's
in the actual fact, not so much, right? Would you agree, Dennis?
I think what's difficult about making comparisons and even judgments here is that you're running against a counterfactual, which is what would happen if there was no such lending from central banks, and you have to compare against something that you can't measure, right? Which is a hypothetical, and that hypothetical would be a banking sector that was presumably frozen by fear, where people lost trust in doing business with one another, and presumably a much tighter banking sector and a worse off economy.
The keyword is presumably, and we heard from the other central banker in the news, and that's Ben Bernanke, our very own, and he was basically giving a bit of a downbeat view on all of the great data points that we've had over the past 2 months. He's saying, don't celebrate yet.
Is he saying this is the best it's going to get in this cycle? Is that one interpretation?
That could be one interpretation, but I don't think it was quite that dour. But on the other hand, he was also saying it's not bad enough that we need to step in with another round of quantitative easing. So neither did he say things were good, but neither did he say that we're going to help, and that is essentially what took 3,000 away from Nasdaq.
And so we saw the bond market sell off a little bit, not a whole lot, and we saw gold lose about $100 at $97, back down at $16.91. That is quite a moving goal.
That's right, and there are many ways that you can think about this, but I think there were some people who were expecting Ben Bernanke to perhaps say, we want to open the spigots a little more, and usually what that means gold prices go up because inflation fears.
And there's gold going. Now this is the COMEX contract.
We should say, Simon, we're now basically in year 4 of inflation expectation. That's yet to arrive. And I know you're a hawk on these issues, but tell us,
well, hang on a minute.
When might we see it?
Well, inflation as measured by the government may not be there, but inflation as measured by the things that I try to buy, because I like to eat steak and beer, and I live in New York City, and rents are going up, and beer is going up, and steak is going up, which covers the 3 major purchases of my life.
Yes, okay.
In my life, so yeah, we have inflation, but I'm just saying it's all on that basket.
But is it at a level of kind of rampant necessary gold purchasing inflation? At least right now, the answer is no.
And at least for today, the answer was no as well, and that's because they're thinking the Fed is going to hold off for the time being.